2020 was a difficult year for everyone. COVID-19 forced many Canadians to work from home, and people working from home inevitably incurred expenses they otherwise wouldn't have had they been working at their regular place of employment. The Canadian government has acknowledged this by allowing taxpayers to claim a deduction to their taxable income for certain types of expenses. Some of the expenses that are claimable include electricity, heat, water, utilities, internet fees, cell phone bills, rent. Unfortunately, for employees, mortgage payments and the interest on mortgage payments are not claimable. Now, there are two ways that employees can go about claiming these expenses. There's the temporary flat rate method and there is the detailed method. The temporary flat rate method is the simpler of the two, and it just requires that you worked more than 50% of the time at home for 4 consecutive weeks in 2020. If you meet this requirement, then you are allowed to deduct $2 for each day worked at home, up to a maximum of $400. The benefits or the advantage to this method is that no receipts need to be submitted, and you don't need to calculate the size of your workspace at home or the percentage of expenses related to work. For many people, this is going to be the way to go. If, however, you know you spent more than $400 in expenses, in office-related expenses, the detailed method might be the way to go. In particular, if you are a renter living in a high rent area or an expensive rent area, this is certainly the method to consider. It does require more tracking on the part of the employee. You have to keep track of your expenses and have proof of them, and you need to calculate what percentage of your home and expenses are related to employment purposes. To be eligible to claim under the detailed method, you again need to have worked from home more than 50% of the time for at least 4 consecutive weeks in 2020. You worked from home because of the COVID-19 pandemic, or your employer required you to work from home. And importantly, your employer must sign a form. It's called the Form T2200 or T2200S. And this is a form that the employer signs certifying that you did in fact work from home in 2020 due to the pandemic, and you were required to pay for some expenses used in your work. Now, you can't claim the entire amount of an expense if not all of it was used for work. You can only claim the portion that was used for work. So for example, you can't claim your entire rent or 100% of your rent because presumably only a portion of your house or apartment was used for work. There are methods for calculating the percentages you can claim. I would encourage anyone preparing their taxes to speak to a tax professional to make sure that they're taking advantage of all of the deductions and credits available to them. If you are doing some estate or tax planning, or you're involved in a disagreement with Canada Revenue Agency about a position they've taken with respect to your taxes, speaking to a lawyer could provide some clarity and guidance. And we have a number of lawyers at our firm that would be happy to assist in these types of matters.